Good afternoon, everyone. Good afternoon, viewers. Welcome to Datapoint Online Forex Academy. Once again, we're going to be talking about how to trade NFP and CPI for beginners. I will try my possible best to expand it, not just for beginners. For those of us who are already traders, we also have a way we can have a benefit on this trade. So, meanwhile, while we trade this, let's see how we're able to too much justice to for us who are not knowledgeable about NFP and CPI. What is the full meaning of NFP? NFP is non-farm payrolls. Non-farm payroll means uh, jobs being added to the economy or job being removed out of the economy. So in most cases, it affects positively and it also affects negatively when the jobs added make the US pairs stronger, when the jobs are removed make the USD pairs weaker. So in this case, it's always good that once you are trading, you understand what you are doing, most especially in area of USD pairs, gold and other indices like US 30, US 100 and US 500, which are also known as um, NASDAQ and S&P 500. Remember, all these companies are based in US, so it also have much effect in this type of analysis. Now, what do we need to understand? Once you are able to follow this training to the end, at the end of this um, training we are doing or bringing to you today, you will understand how to trade gold like a pro. You will understand market reactions. You will stop guessing when it comes to news. Sometimes you put a buy and put a stop on it at the same time. Then you will learn a lot of proven trading processes that are necessary to understand as a professional forex traders. So these are what we need to understand. Please do not um, hurry to leave. Just follow us to the end of this trading or training so that you understand what we are doing. So let's go to um, the next project or program. Now, what we'll be having is what is NFP? NFP, as I've said earlier, we have um, what we call non-farm payrolls. Non-farm payroll is to measure job added and job lost in the US economy. And once the US economy have job added, it makes the USD stronger. But when some jobs are being removed or lost, it makes the USD weak or weaker. So the major impact on this is it affects gold and forex trading. And not just only gold, some of the indices also affected. So because indices are more traded with, they know their majority of them are US stocks, so it also have an effect on them. So remember that it's very, very important that we must understand how this affects our daily trade activities. So that is the reason why we are doing this training today so that we can know what to do when it comes to forex trading and trading NFP and CPI effectively. So it's remember this in general create high volatility, whether it's bearish or bullish, whichever direction is going, it gives you high volatility. That is the reason why sometimes we tend to understand what forex is really all about. It's about bullish and bearish, right? Now, why NFP? NFP moves in market structure because when the economy is weak, when the jobs are being lost, the USD become weaker. When the jobs are added, the economy becomes stronger, then the USD become stronger. So in that case, you see bullish and bearish. So that is the reason when it's weak, it sell, when it's stronger, it buys. So you need to understand that carefully and readily uh, before then your analysis on your technical analysis must be in place so that all your structures will be respected. Now remember, it's not just structures being in place. Before the market, go and check the days for CPI and NFP. Most especially your CPI, NFP comes every first Friday of every month. So every new month you have a CPI in place. So sorry, your NFP in place. So CPI follows the other weeks and all that. So it's very, very important that you also understand. So for you to know this more, go to your investing.com to check your news daily or weekly. Or you can go to your forexfactory.com to also check all this information properly so that whenever you are trading, you will know what to do at any time, right? So what are the pairs that actually affect or have an effect? Those are the USD pairs like Euro USD, GBP USD, USD JPY. Then other commodities, you have gold, which is SAU USD. Remember, USD is also added to gold. Then on the indices, you have USD 30, USD is there. On the NASDAQ, you have USD 100, USD is there. On the S&P, which is not that too volatile, but it's also affected because it's a USD pair, but it's also called USD 500. So you must be careful whenever you are trading these pairs during the NFP or CPI. Now, for beginners, gold is also good, but be careful whenever you are trading gold. Don't over risk because gold volatility in NFP and CPI is always very massive. And the same thing with other USD pairs. For me, I advise you pick any other USD pairs if you are to trade gold, and make sure your data is well carefully studied, your structures are in place. So just follow us, you will get to the end. Before we get to the end, you will understand all the secrets of trading NFP and CPI effectively. Now, common beginner mistakes that we observe sometimes is entering before the news. Whenever there is news, don't rush to enter. Allow news to finish, then wait for like few minutes, like 5 to 15 minutes to settle down. Trade Trading huge lot size is very risky because your account could blow off or could also have an effect. No stop loss is a big mistake when it comes to trading forex in general, not just NFP or CPI. Chasing candlesticks, whenever candlestick spikes, then you follow it up. Remember, in most of the fundamentals, spikes will always have a retracement. So always wait for retracement before you take your next action. And at the end of this, before the end of this uh, class, you will understand other things that you need to understand or know before you can take or enter a trade. Don't overtrade or don't revenge whenever you have losses. Revenge trading is always an issue. Don't overtrade. If you get some profit, have target for the day and close. There is always market every day, Monday to Friday. And if you're also not comfortable with Monday to Friday, you go and study indices like synthetic, trade over the weekend or crypto and trade over the weekend if you are the type that will not don't want to have a break. But at the particular time you are in the trade, don't overtrade. Now, the biggest secret is stop predicting NFP. NFP is not something you just say because you are a trader, it's either you buy or you sell. No, it's beyond that. It's either you buy or you sell can never help you for any market. What will help you is understanding the structure, understanding what the market is all about and what you're actually trading. That is the only way you can trade forex effectively. In general, you don't predict. If you don't understand the fundamentals, don't trade news. Allow news to go, follow your structures, follow your technical analysis. You will definitely get to the destination you want to get to. Professionals react to actual data released and market structure. What are those data released? You need to check back to um, your history. Ask ChatGPT, ask Google, check data analysis through your investing.com or your Forex Factory. There's a lot of data that are being released take your time to study them. Why these data are released, when it was released sometime 2 weeks or 1 month or 2 months back, how was the reaction, what was the reaction of the market. With that, you tend to get more information you need to get while you learn along, right? So you don't need to hurry. Market is open every day for you. So my simple NFP strategy is: one, I wait for NFP to be released. Once that is released, I wait for 5 to 15 minutes before taking any action, because that volatility that will happen in between that period, allow it to happen, then get settled. Then you can now take the next line of action. So once that is done, what you now need to do is to take a very direction that the market is going through your structure. You follow that your structure, I can assure you that you get to the result. You get the result. Then when the market is also settled through that direction, there is what we call a pullback. Wait for a pullback action, let the market get settled. Then you will see the structures. If you are structured or a trend or support and resistance trader, market will get to any of those point of interest or inner structures for you to take your direction or your entry. And your stop loss level also, you will see it very clearly and easily. Those things are formed with your candlestick formation. If you are using the indicators, whether moving average, whether stochastic oscillator, whichever moving average you are using, the structures will be defined and will be open for you to clarify before you take your next action. So traders, is very easy to trade fundamentals if you know what you are doing. Now, what are good examples? Good examples are sometimes when the weak NFP is released, USD became weak and the gold will become weak. Then what you need to do, go to your resistance. When the market touches your resistance, wait for pullback, then you can buy. Then target your risk to reward to 1 for 2. Don't over expect profit, because market is really not settled at that time. The volatility will be there, and it's very obvious that anything that you trade at that period, it will affect your market. So once you are able to get 1 for 2, take your profit and leave the market. So your bearish is still the same thing. What you do is, when NFP is weak, if your NFP is weak, what you need to do is, maybe your strong NFP, your USD will be strengthening and your support and resistance pull back, then you can sell. Also take 1 for 2 for your risk to reward. That is how market is being traded. Now, your risk management, I've preached this, I've talked about this in virtually in all my videos. I've always been talking about risk management, because for you to stay in the forest is risk management. For you to leave the forest is risk management. To be frank with you, nobody in forex trader today that have succeeded have not made mistake when it comes to risk management, because sometimes humans, we are insatiable. If we get one, we want to make it two. If we get two, we want to make it three. It has happened to all of us. And also sometimes greed. When we see profit, instead of us to break even or to take our profit and leave the market, you continue. So what I normally do, you break even. If the market let you retrace back, if I'm satisfied with what I'm seeing, let you break even to that point, then I take whatever that is left. If it does not give me break even, it continue to go the direction and I make more profit, fine. But I've always more to make sure that I break even or possibly close the market entirely if the volatilities are high. Because sometimes volatility might be very high. Before you know it, the spike will just come up and take you off. Then you are off the market again. So it's not really the best when it comes to trading forex. So the risk management is always make sure you use your stop loss. Make no mistake about that. Stop loss is very important. Then the other part is take partial profit whenever you are trading your forex. Then the third one is protect your capital by putting your stop loss, making sure your market is not too over risk by your too much lot you are taking. So I think in subsequent videos, as you follow us, I'll be doing how you can calculate your stop loss, your leverage, and other things. I've said that hopefully this week we'll do something like that. So for instance, if you have $100, 1% for one risk. If you have $500, 1%, 5%, $5 for one risk. Um, if you have 1,000, $10 per trade. So that is fine. If you take 3 trades a day and you make one for two, that's giving you $30. If you put $30 together in a week, that gives you almost $150. $150 is massive. It's over 10% of your account. If you can do that for 1 month, that gives you almost $450. That is profit in a month. So my dear, there is no market. Market is always there for you. There is no point to worry about it. Take your time and make more money. Now, NFP trading checklist. Before you trade anything, check your support and resistance. Make sure you check your Forex calendar, economic calendar, which I mentioned earlier. I use Forex Factory and investing.com. On the Forex Factory, the major ones news there will show red. Is always happening during the New York session, which is from 1:30 to 4 o'clock, and go to investing.com the same time. But on the investing.com, there won't be a red sign. It will show you triple star, which is 3 star. If it's 2 star, it's not too strong. It's strong, but not that 3 star. If it's not that going to be volatile, it will show you 1 star or nothing at all. But most of the cases, 1 star shows that it's not that volatile, right? So always keep this in your mind because that is the area you need to first of all check before you enter your trade. Now, after the market has reacted, the volatility is confirmed, wait and check your confirmation direction. Sorry, wait and confirm your direction. Enter a pullback. That pullback I've explained earlier. Allow it if it's on resistance, allow it to pull back. Maybe you go for a buy or a sell depending what the structure is giving you. Your managing risk, I said it earlier, make sure your risk is 1 to 2%. For those who have enough money, 2%. If you don't have enough money, 1% is fine. So no strategy wins 100%. Yeah, that is the truth. In NFP or CPI, no strategy is 100%. But if you can get once in twice in a month, fine. And consistency beats prediction. Once you keep doing this, with time, you get used to your research or your analysis. So by the time you trade once in a week or once in a month, you don't do research, you don't check what is happening, you don't check how things work. At the end of the day, you will not understand how the market actually reacts. That is the reason why sometimes it's always good that we understand and continue to practice what we do if you really want to be a forex trader, right? So the next one is discipline beats emotion. Sometimes we tend to trade with emotion. When we lost out, we want to revenge, we want to collect the money back immediately. So you don't need to do that. And sometimes we are not patient enough to see our structures are in place before you enter the market. So always follow all those systems to be sure that we know what we are doing. And risk management beats greed. Remember, I said it over and over. So don't over risk. And when you see profit and you're okay with the profit, take your market. That is why we always say 1 for 2. If you risk $100 and it's giving you $200, leave the market. The final message is stop guessing. Market is not about guessing. Sometimes people feel that is why people tell us that forex is gambling. Forex is never a gambling. It's not a bet system. So it's because some of us tend not to study, do research. People now see it as if it's gambling because you just enter and click buy and sell button and you expect profit to come. No. Wait, confirm, execute before you take any decision in the market. And success comes from discipline, not prediction. I said that earlier. Your discipline must be patient, emotionally free, practice, and you must understand what you do. Your risk management is part of discipline, right? So the call for this is always continue to like, subscribe, comment on our YouTube videos, our live trades. So remember, we do our live trade every Tuesdays and Thursdays. We're always live so that we can trade with you. If you have your account, fund your account, take our analysis. I can assure you a lot of people are making massive profits as we do all this. So don't forget to continue to like and follow us in all what we do. Thank you so much.